Boom, bada bing. Welcome, everybody, to the official DIY investing live stream. I'm with my friend Dallin Anderson at High Altitude Investing. It's been a long time since we've streamed together, but we're local in the same area. He's actually the person that he got me into crypto entirely in the beginning. So he's pretty much the person I learned everything in the beginning, trading, how to use the blockchain, how to send Bitcoin. And yeah, he taught me also how to start a YouTube channel. So we go back pretty far. I wanted to have him on because he's got a lot of good perspectives on the market that I know that you guys are going to value. A lot of you guys already watch him on the channel, so it'll be a really easy one. But thank you, sir, for coming on.
Yeah, happy to be here, man. I'm excited to do a stream. I'm excited to talk again about crypto with you. We haven't done this kind of a stream for a long time. We used to do the Moon Boy podcast quite a bit. So I'm excited to be here, and yeah, it should be a good experience.
Heck yeah. So, yeah, we used to do the Moon Boy podcast back in like 2020. So that was something most people probably don't even know about, but a lot of you guys go back far enough to remember that. So shout out to everybody. But we're going to talk about all things crypto today. I mean, we've got charts to talk about. You know, the market is looking really nice. There's a lot of perspectives that we can pull there. And he's got a lot of different type of perspective in the market, different charts that I'm sure that a lot of you guys don't even look at. So I knew that it would be good value because anytime I hang out with him, he always brings up different perspectives that I don't know. And that's why it's so nice to have people that you can also be investing into the markets with, because if you don't have other people to bounce back ideas from, it's hard to know like where you're at and like how to, you know, more or less just learn and grow. Cause like you constantly have to be learning new things. And then I always made my YouTube channel in the beginning because I knew if I was like teaching back the things I was learning in courses that I was paying for, then it would help me to just absorb the information. And it kind of works the same way with somebody that you can meet up with in real life. You know, they don't have to be an expert in trading, but they don't even have to be an expert in crypto. But like there's a lot of people in our hometown that even just trade Forex and stuff, other type of markets. And there's a lot you can learn from different people. So, you know, these type of situations are always fun because we can just basically sit here, talk about different ideas, learn from each other, and then also jump into charts and perspectives that I haven't even been looking at either.
Yep, it's super nice to have different perspectives. And Donovan, you and I actually see the market the same quite often. Every once in a while, we will see the market differently. And it's super nice to bounce ideas back and forth during those periods. But like if you don't have somebody to do trading with, to do investing with, definitely find a friend and get learning together, because you guys are going to help teach each other a lot faster than you ever could on your own. So
yeah, agreed. Well, let's start off and look at some charts here. Some of you guys actually do remember the Moon Boy podcast. So
we still get messages from people like in comments and stuff, bring back the Moon Boy podcast. And people are so mad it's not a thing right now.
I know. Honestly, it was fun though. I remember we pretty much stopped once we first moved to California, but that entire time was fun. But the setting though was like kind of unique because we were just hanging out in at your parents' house. And so like we just had a table set up and that was pretty much it, 2 chairs. We didn't really have any sort of real effort put into it, but that was why it was so fun. It was just fun to talk about crypto. And you know, normally we're always just looking at charts, but inside of that setting we were just able to hang out and just talk about, you know, things that are like more thought based and just ideas around crypto, because that's the one thing is you get into the charts and they tell a perspective, but you're mainly looking at the price. And so you have an objective opinion and perspective on things, whereas like there's so much deeper like narrative based stuff in crypto, different technologies that are going to be coming out. And so you don't get to normally talk about that as much. And so these live streams are always a really good opportunity to basically do that. And, you know, I've always liked live streaming. I didn't do it very much, but as I've kind of, well, everybody on Hex and Pulse Chain stream. So I came over there and was like, you know, this is actually kind of fun to do. So figured that we might as well jump back into it, whether we get into the podcast again or not, you know, that's to be decided. We'll let you guys determine, you know, how much you want that. But yeah, let's get into some charts here.
No promises though. Right. But definitely let us know. So
okay. So we're going to jump into some real charts here and actually take a look at things. So to start off, let's go and look at Bitcoin. I think that this would be the best way to kick off. I didn't feel like actually making a normal video today just because sometimes it's fun to just make a stream and go over things, because you're not held to as much of a standard. Like you have to like pre-prepare the video and figure out what you're going to talk about. These live streams are fun because you can kind of just talk about whatever the heck you want. So big picture, let's go to like the monthly time frame. No, the quarterly close happened yesterday. That's what I want to start out.
Okay.
So yesterday I talked about this just briefly at the end of my video, but we did finally have the quarterly close for Bitcoin on the 3-month time frame. So that closed, and a lot of people, you know, didn't really talk about this on Twitter that I saw, but to have a quarterly close that actually ended up holding our entire range high from that consolidation, in my opinion, is really bullish. Because if you guys remember when we rallied all the way up to 65K, we kind of met that resistance and made that rounded top type price action before that big drop all the way back down to like 30K right here. And then we made a new all-time high at 69K. But for the most part, this has been the range that we've been consolidating on. And so I think for us to get a quarterly close, actually holding on support, and not only that, but it's not like we're just sitting right on top of this level, but we did get a buyback at the same time. So I think that that's a really bullish setup when we're looking at this. But then also even considering, you know, when we're looking at Ethereum itself is looking like we're going to be having our ETF coming up here pretty soon and getting, you know, announced. Well, it's already been announced, but actually going live. So, you know, I talked about that in my yesterday's video, covering some of the news that's been going around about when that is. But the way that the Ethereum chart is looking, because we've already mostly fully retraced that hype that we had, because remember, this entire candle came in shortly after that announcement of the ETF approval. So now that we've erased that, in the shorter time frames, it does look like we're working on the potential of a breakout right in here. And if, as long as we kind of hold these support levels, I do see the potential that we could be setting ourselves up for a reversal in the shorter time frames, really fueled around this ETF coming out this month, assuming that we get a lot of volume.
I think a lot of people got way excited about the ETF getting released up here. And now that those people are starting to wonder, oh, maybe it is bearish, maybe it's going to go lower. I think now that ETF can really, like the excitement can really take full force again, because the retail kind of has given up again already. Because there's a whole sell the news thing that happens where you buy the rumor and then the news comes out, it's all positive. People think because it's positive news, it's going to go up. And now that those people think it's going to go down because it pulled back instead, I think it will be ready to go higher.
Yeah, exactly.
So,
I mean, it's all this cycle. The one thing I've noticed compared to other cycles is it's a lot more fundamentally driven than ever before. The big thing I look at is always like the time cycles and whatnot, and comparing each one, because that's stayed relatively the same as much as the price action itself can vary. The time has stayed relatively consistent. And so now that we have this more fundamental drivers of value, and the prior cycles that, you know, there wasn't as much real demand in the normal world. We didn't sync up to the stock market as much because we had lesser market cap. So we weren't valued the same, treated the same investors weren't really investing. So now that we're at this point where Bitcoin has the ETF, Ethereum's ETF is going to go live and start trading. There's talks of Solana being the next in line. I think it's a domino effect before all of these others kind of follow suit. And we're going to be probably even looking at potentially some meme coins like Dogecoin getting an ETF. Just, it wouldn't surprise me at all with the amount of volumes that they're getting, because everybody wants to make money. If these different institutional entities have the ability to make more money off the trade volumes, I think that they're going to take that. So when we're seeing all of this playing out in real time, there's a lot of drivers this cycle that come from the normal world. The presidents are talking about crypto, talking about, Trump saying that he's pivoting really pro crypto. These are drivers that we didn't really have in prior cycles. And I think it's a huge testament to where we're at, how we've got so much more adoption this time than ever before, that this is kind of the first cycle where crypto is truly mainstream on a massive degree, to where we could speculate of the potential of a super cycle, because we've always been speculating of that. But was there really ever sort of that potential happening in the prior cycles? I wouldn't say so. Whereas this cycle, we have a lot of fundamental drivers of true, regulatory adoption. And that's kind of what I figured would be the big driver of a true super cycle type move.
Well, I think that the retail money, the institutional money has been accumulating crypto for a long time now. Really, since 2018, when we pulled back, institutions have just been buying as much crypto as they can. And the 2017 cycle had like an institutional cycle type of percentage gains,
Mm-hmm.
but crypto is just this miniature thing that
Yep.
nobody knew about.
Mm-hmm.
2017 was like
small. There's 3,000 cryptos total on CoinMarketCap.
Very small industry at that point in time. And so now that we actually have the infrastructure, the volume, and institutions have been accumulating and building infrastructure, I think this is the cycle where we do have a super cycle. And I think it could be like 2017 in percentage gains, but it's going to be such a bigger market cap and industry that it will be more of a mass adoption kind of event.
So you're saying lesser ROI, but more volume overall?
I think that the ROI is going to be really big this cycle, like bigger than the last cycle. But I don't think we're ever going to get a 2017 ROI again, just because the market cap was so small. The conditions were just right to have like EMC squared, for example, do like 250 million% or whatever I think it did 250,000%, but
either way,
still, like I don't know that maybe some meme coins could do that, but I don't think we're going to have any major projects do like an EMC squared type percentage gains.
Well, that's a good point, and I think that that's a good thing that we could jump into right now. Let's go over to like CoinGecko. And let's just take a look over here. So we're looking at 2.5 trillion total market cap. So if we're looking at like different categories of cryptos, I like to look at this type of stuff. You're talking layer ones. If we jump into here, Ethereum, Binance, Solana, Toncoin. But look at the market caps of all of these. For example, Toncoin, this is the blockchain of Telegram. And I really have a lot of confidence that this continues to perform well and outperforms. It's going to, just with the user base that Telegram has as a whole and how much we all rely on it in crypto. But you're talking $20 billion in total market cap. Now, the problem with market cap in and of itself is it's in a way a flawed metric. So like, for example, what I mean, it really comes down to like the circulating supply. And you could talk about the more supply that is locked, the market cap is kind of like this fairy tale number, because you can have cryptos that are worth hundreds of billions of dollars in market cap, but it's because there's either such a low supply or a low existing circulating supply. So, one person might have like half of the supply that could just go dump it all in one go. And that's kind of one thing I've noticed with a lot of new coins this cycle is they launch with a very low circulating supply as is, scarce supply. And then they snipe the launch so that they can, hoard that already small existing supply. They don't sell that. Well, some of them do, but the good ones don't sell that. And then it becomes really easy to drive up the price. And this is one of the ways that many people have created successful projects, is just through manipulating that. So when we're looking at market cap, we need to understand that this in and of itself has a lot of variables with it. And these things can get ballooned into proportions that you just didn't think were possible, but it doesn't represent a real valuation. It's not like it's not like the project itself is worth $20 billion. Nobody could actually realize any sort of $20 billion out of that entire market cap, because the liquidity is the big thing. The less liquidity there is, the easier it is to drive the price up or down. So if you're talking these higher cap cryptocurrencies, the big thing that we would be looking for is just the overall liquidity that they have, which I don't know where. I don't think we could look at DeFi Llama or something, but we're not even looking at the right chart. I just realized I forgot to switch the screen, but let me go over here and switch it right here. All right. So if we're looking at all of these, the market cap is somewhat of a valid metric, but the big thing that we need to understand is that it's not the most important thing. It's liquidity is going to drive the value. But when we're talking about cryptos being worth this much money nowadays, in the billions of dollars, he's right. Like, we're talking about crypto as a whole being worth like altcoins as a whole being worth like $50 million total market cap. So, all of these have significantly higher valuations. It would take so much more money to drive the prices up of everything up 100x at the same time. It's just not realistic to assume that. And that's why we have to do our own due diligence by what I think the big winners this cycle are being early to different chain tokens. Because like when we're looking at this, we have all of these layer ones, right? Ethereum, Toncoin, whatever they are, but they all have tons of market cap. The issue with that is these have already become really overvalued, and chances are there's a lot of token unlocks for many of these. They have high fully diluted valuations and maybe lower market caps, but those the high fully diluted valuation just means that there's a lot of tokens ready to be unlocked over time. So that's founders dumping, that's influencers dumping, that's all of these different people that are up a lot in profit dumping. So the best thing that you can do is find these ecosystems like Injective, for example, and then you go over and actually look at what the projects are built on them. And then that's where you're going to be able to find those 100x, 1000x opportunities. Don't get me wrong, Injective could still do 100x from here and hit a $200 billion valuation. There's going to be layer ones that do that type of stuff because there always are. However, if some of these are able to do a 10, a 25, a 50 to 100x, there's going to be tokens in those ecosystems that just massively outperform everything by 1000x. So you have to kind of just know where you're placing your bets this cycle versus 2017 just being, oh, this pumped 3x, I'm going to buy it and be up 6x tomorrow type thing.
Right. Yeah, I think that the market cap is really big in crypto versus, well, it's not what I think, it's just is. The market cap is bigger in crypto than it was in 2017. And so it's going to take a lot more money to move the market. You just have to have more money to move a market when there's a bigger market cap. It's plain and simple.
Mm-hmm.
Now, will a lot of these bigger coins do 100x? I think some of them will. Before the end of the cycle. I think some of them will do 50 to 100x. Mm-hmm. Part of that is because of how much money we're printing.
Yeah.
So a $200 billion market cap isn't going to be like that crazy, because 100 billion of it is going to be printed in the next week or whatever, just how much money we're printing.
Yeah.
So, but I do think that the actual purchasing power, like your realized gains, will be pretty big this cycle. Whereas during the pandemic in 2021, even though crypto went up in value, if you compare it to the money supply, Bitcoin didn't even make a new all-time high.
Yeah.
In other words, the purchasing power of Bitcoin didn't even do a 2017 like run where it increased a whole bunch in value because of how much money we were printing. So I think we will have a huge 2017 like run with 50x, 100x gains, but the purchasing power, and it will be a purchasing power bull market. In other words, the purchasing power of your crypto will increase. But one of the reasons that we're going to be able to do 50 to 100x on some of these is because of how much money we're printing.
Yeah.
But also because of that, the purchasing power will increase, but not like crazy, right? It won't be insane.
Yeah.
I don't think.
That's a really good way of looking at it. And it's funny you bring that up because just last night, or just the other night, one of the Celtics stars, Jason Tatum, got signed to a new contract. And I'm pretty sure that they're 4-year contracts with a 5th year of a player option, or a 3-year contract with the 4th year of a player option. One of those two. Either way, I remember Kobe Bryant back in 2008, 9, 10, something like that, getting a $100 million deal and cracking that for the first time and just being blown away. And that was for sure 5 years. And now we're talking about these NBA players, getting $350 million over that, over $250 million is just truly insane to think about. But what it goes to show is just how worthless the dollar actually is. It's more of a reflection of how much money we've printed since the COVID pandemic happened, because that really is going to be a huge staple. But this guy made a really good point, Zenith. Shout out to you. I hung out with this guy in Vegas. He's awesome. But the BTC M2 money supply chart is super underrated. Got to shout that one out more. So if we come over, let's go actually look at that one, because this is one of my favorite charts. Now, I can't remember how to, hold on. I'll remember how to get it real quick. You got to type it in a certain way to be able to pull up the right chart.
Yeah, there's a special trick to get it to work, isn't there?
Yeah, there always
It is super useful to look at, because people think, oh, Bitcoin went to 69,000 and pulled back in 2021 and 2022. I'm trying to remember exactly what year. That might have been 2022 that it hit 69,000. But the actual value of one Bitcoin in terms of purchasing power was the same as the peak in 2017.
Mm-hmm.
So when Bitcoin hit 70,000 in 2021 or in 2021, everybody thought that it went way high in value, when really it wasn't really that much higher. It was just like the same of it being in at 20,000 in 2017.
Yeah, right.
Let's look at the chart. It'll be easier for you guys to understand if you are looking at the chart. But
oh, it did pull up the right one. All right, boys and girls, here we are. So when we're looking at this, this is going to show the M1 money supply, which is ultimately all money and assets that can be easily converted into cash. So any type of asset that you have that you could sell, get rid of, and then quickly have it into cash within a short period of time. That's what you're talking about, this supply. So the reason why, let's see here. The reason why this is important is because it can show, whenever this chart is actually breaking out, when Bitcoin is outperforming it, it can show that there's a lot more money circulating in the market for overall retail to be able to buy. And what we've noticed inside of this chart is the fact that this is actually broken out against the M1 money supply for the first time since that 2017 cycle. So right in here, because even in the last cycle, we peaked over here at 69K, but it was a lower high from the peak that we ended up making all the way back in 2017. So this entire time we've been in this big long-term consolidation, but this is the first time that we've broken outside of this consolidation. And what it kind of reminds me of is the same type of chart that we had in our last cycle when we're looking at, Bitcoin as a whole, because Bitcoin went through this like triangle type consolidation right here. This was our consolidation in that last cycle. We made this big triangle consolidating. And then once we broke out and kind of retested it here, that was right before we got liftoff back into our new all-time highs. So when we're comparing the two, we're pretty much looking at the exact same thing. What was this? NS. So when we're looking at the same type of consolidation, I think it's going to behave in the same way. The only difference is you're talking, like 2,400 days worth of a consolidation in here. So I think that that's the big thing that you need to pay attention for when we're comparing these cycles.
Yeah, I think that the consolidation pattern here that you see is the same consolidation. It's just a bigger version of that. And this type of a massive kind of consolidation is going to lead to a massive impulsive move. I mean, the bigger that the market, the more time that the market's consolidating inside of a range, once you break that range, the more pressure the market has to take off, because it's been building up that pressure throughout the entire triangle here. I mean, if you imagine since 2018, if it's just been moving inside of this triangle, think of how much pressure the market's been building in this area in preparation for a big moon coming. All of that time that it spent going sideways versus the world money supply and bouncing around, it's been building massive amounts of pressure to really take off here. In other words, I do think we will have a 2017-like run where our purchasing power increases, but I don't think it's going to be the same percentage gains quite as 2017, but I do think it's going to increase versus the world money supply. Whereas in 2021, it didn't even break out versus the world money supply. So I think your purchasing power in crypto will increase and the percentage gains will be very big, even though it's going to take a lot of money to move the market, just because of a breakout of this pattern here,
Yeah, I agree. I think that this is one of the best charts that you could be looking at long term, just for determining, ultimately what is going to happen with crypto. Because there's a lot of, what I like to compare this chart to, because actually I'll pull it up here. We'll look at both. So whenever I'm looking at this chart, I always pull up the Bitcoin dominance, because when we're looking at the Bitcoin dominance, this entire thing over the exact same period of time is in the opposite type of pattern. So this one, I guess you could say, is more of a symmetrical triangle, but it doesn't really matter. Over the exact same period of time since 2017, we've been inside of a descending triangle with a horizontal support range and then a descending resistance all the way through here. So that's what we're looking at when we're comparing the Bitcoin dominance. So if the Bitcoin dominance has just been consolidating in this bearish continuation pattern, which is right here, perfect textbook one. And then we're looking at the Bitcoin breaking out against the M1 money supply for the first time since 2017 in relatively the exact same type of consolidation. What it tells me is now that Bitcoin's getting ready for that new all-time high move, Bitcoin dominance is at that point of topping. We have tons of bearish divergence that's formed. That's the OBV. But on the RSI and the MACD, you have tons of bearish divergence that's formed here. And I think that this is ultimately telling the same story where, we're going to see such a more hype cycle. And the reason why we were outperforming so much in this one against the M1 was because we had so much more demand for altcoins. There was a lot more retail hype in general. There was a lot more, the economy was strong. The stock market was breaking out. We had just gone through the Obama administration, went through the 2008 financial crisis, went through the 2008 or 2011 sell-off. And then once Trump got in, with the stock market started breaking back out into a new all-time high. So that was a huge, decade-long correction that we went through that we then broke bullish from. And I think that with us having our longest correction in our stock market, looking at the SPX, we corrected for a year. We followed Bitcoin as the same type of bear market bottom. That was the longest consolidation, reaccumulation that we have had since that 2011, and 2008 correction. So I think that what we're looking at here is a relatively similar market conditions where we have a bullish stock market. A lot of people have been fighting me with that, saying that the economy is weak, when realistically, every single month we have data reports coming out as bullish for our economy, showing that there's growth, showing that there's, more jobs, showing that there's more, everybody's earnings are up as well. So even though things are tougher with inflation, I think that we're looking at relatively similar market conditions. The issue is we're just kind of in a dying economy, being the US dollar in general. And I think that it's just going to continue to kind of stagnate as we go lower. But the reason crypto does so good is because they are, deflationary tokens, a lot of them. And if not capped supplies that, are ultimately going to just see upside with the printing of more dollar and hyperinflation. So I don't find it coincidental that these are all kind of lining up at the same time.
And also, if you look here, there's a massive inverse head and shoulders pattern. You have a left shoulder, a head, and a right shoulder, which is one of the most high probability trading patterns that there is. And it is both a continuation and a reversal pattern. Some people say, oh, head and shoulders is only a reversal, or inverse head and shoulders is only a reversal, but it's both continuation and reversal. In other words, this pattern right here, this inverse head and shoulders pattern, is valid. And we actually just broke the neckline when we came up above this level right here. And so this pattern, if this plays out like it has a high probability of playing out, then you're going to see Bitcoin rise significantly versus the world money supply, which is really a miracle, because to have anything rise against how much money we're printing is insane. That just goes to show how bullish something is. If it's rising against the total money supply, then it's really bullish, because the money supply is increasing like crazy. It's just continuously increasing.
Mm-hmm.
So
exactly.
You have to be rising faster than the money supply, which is not an easy thing to do.
No.
So
not even slightly. See, we're looking at some fun things playing out this cycle, and I think that this really will be the most bullish cycle that we've seen in so long, just due to a number of factors, but mainly just being the overall, bullish economy. If Trump were to get elected again and then really flip a lot of these crypto laws to be like optimistic, really bullish for crypto, he comes in, just really saves the entire industry and promotes a lot of growth. I really don't see how we wouldn't have just an absolutely massive cycle and have a really profitable time throughout that. So we have these sort of fundamental drivers in a similar way that we did in the last cycle. The only difference is these people have actually came out and supported crypto versus, more or less ignoring it in any of the prior bull runs. So there's a lot of things that we can look at that, in my opinion, point to this big picture. Is there any specific charts you want to look at real quick?
Maybe just like the dollar here in a minute. We'll look at the dollar. We can do it right now. So like in 2017, we had the craziest bull run ever.
Yeah.
And nobody was talking about crypto. Nobody really knew about it. 2021 got cut off early. Mm-hmm. It was kind of a little taste of what a bull market can be, but it wasn't really a real bull market. Mm-hmm. if everything goes like the charts are set up, then this next bull market we're headed into, it's going to be absolutely insane. Like, it's going to be the biggest bull market in crypto history, even if, you know, the percentage gains aren't 500x, right? Even if your favorite altcoin only does 100x, there's going to be like so many altcoins that do 100x, and it's going to be such a household name that this will be the biggest crypto cycle ever. Because crypto really has not been a household name yet. Like, it just hasn't. It's been used, but it's not like the internet yet. The internet is a household name, right? Crypto, we're just barely starting to move out of the dial-up phase. And that's kind of still like, there's still a lot of coins that are dial-up, you know? So
yeah, well, if you ever tried to build on Pulse Chain, I would say that that's definitely in the dial-up era. Because my lord, that was tricky to navigate. But there's a lot of cryptos that are like that, though. That's the thing, is like we're building these application layers, and the only way that you can use those application layers is if you're like an advanced computer technician that you can like program and build things and whatnot. But then you have to have advanced knowledge in blockchain development too. So, you know, it's not quite as hard as it used to be, obviously, but at the same time, like, if you're not advanced with a lot of the stuff, you're not going to understand it. But imagine when it gets to the point where you can kind of just like use AI to, you know, you'll just type it in or speak to it, and it'll just kind of program things for you. I think that that's really where a lot of this stuff will end up going. So there's going to be a big change. But like you said, you know, we're in the very early infancy stages of all of this. You know, not even the fact that we just had bridges kind of come out in the last recent while, in the last bear market for the most part, kind of just shows that we don't even have interoperability yet. You know, like, we're still working on that. So blockchains can't even really communicate with each other without having to, you know, bridge and do all of these other application layers on top of everything, have multiple wallets and whatnot. So realistically, you know, we're getting closer through Chainlink and through having these live price feeds, having DEXs. That gave us the ability to trade on chain. Now we're so much further past just oracles in general, and we've got basically the majority of application layers existing on chain. So I think that this cycle, due to the fact we had such a fallout of centralized exchanges, we're going to end up seeing a lot more people gravitating to on-chain altcoins, trading on DEXs, trading perp DEXs, like what we've been doing on Apex. You know, those are really nice because now we can trade on a DEX. We don't have to worry about all these other, you know, issues that you get with the centralized exchanges. And we're kind of just our own, you know, sort of broker account at that point that we have full custody of. So I think that that is a sign of where we're at. But like he said, you know, we're still not quite there to have that full adoption that we need when comparing it to what the internet did.
Yeah, and I think this is a cycle where that happens, where we get more of that real adoption taking place, where this technology actually works. Because there's a lot of technology in crypto that does work, and then there's a lot of technology that just straight up sucks. Like, it's just young, it's still being developed, it takes forever, it glitches, it doesn't work. Like, that's just the reality.
Solana has to turn off their, you know, blockchain occasionally because it just starts overloading. So that's Solana about to get an ETF. So I mean, and we all know how bad Ethereum sucks for gas fees. Like, we're talking about the top cryptos in the market being, you know, like this. So,
but at the same time, like, we've started to see a lot of development from even when we were first into it, where like the Bitcoin network gets laggy sometimes still, but I mean, there's been a lot of progress. So I think that this bull market is where that progress really like takes full force and the price increases. And one of the reasons so many people are skeptical of a big bull market coming is because they saw 2018 and they saw 2022 and the crashes that happened during those periods of time, but they haven't seen, maybe they've seen 2017, but they haven't seen a 2017 like bull run that is bigger, right? That's bigger than 2017. And so a lot of people are still in their minds, they're still thinking about the bear markets. And when you're accumulating for institutional growth, which we have been since 2018, you're talking about the crypto markets have just been played around with, like just pumped and dumped, like just like it's a game, for the past 5-8 years.
Yeah.
Let's see.
10 years, really.
Almost, yeah.
15.
Basically since
15 years.
Basically since 2018, when the pullback started happening, institutions started accumulating crypto. And in 2018, that's when they really started to. And they haven't stopped accumulating since. Even though Bitcoin did this big run up here, it pulled back super hard again, more accumulation. We saw more volume during this period here in the crypto markets than we'd ever seen in human history. We started to see billions and billions in volume, which is the same type of volume that we saw when big institutions started accumulating the internet bubble after the crash.
Right.
So people are they're in disbelief right now because we haven't had a 2017 like run, but really it's just because since 2018, this entire time institutions have been accumulating crypto, building the infrastructure for a massive bull market. And when it actually comes, people won't be ready for it because they've been chopped up the whole time since the top in 2018, right? So that whole time it's been accumulating, but it's been a buying opportunity for people that know what's going on, So.
Yeah, I agree. Well, I mean, for example, if you come and look at some of the old dinosaur tokens from these old prior cycles, let's see here. Let's go look at the Coinbase chart. So if we look at like Bitcoin Cash, for an example, Bitcoin Cash has been in a massive accumulation ever since the 2018 bottom. Many people, because of the fact we had this big lower high on many of the old altcoins from the original 2017 cycles, so many people assumed that this is just done for. It's going to have another one of these and just die out in the same way it did in these other cycles. I can't, disagree more with that, because all I believe that we're looking at here is just a lengthier type of reaccumulation. This in and of itself is just this long reaccumulation pattern. If we're looking at peak low to where we're at, you're looking at 2,000 days. The reason why I've maintained the belief that this is a 2017 type bull run is because throughout that entire same period of time, that's what the Bitcoin dominance has done. It's just in this descending triangle, reconsolidating, reaccumulating before another new all-time low ends up following. So when we're looking at the dinosaur altcoins that have actually existed since prior to this move, you're looking at them making this big accumulation pattern. And I don't find it coincidental that the Bitcoin dominance is in this big bearish continuation pattern at the same time.
Right.
Because what we're looking at here is this thing, to once they start breaking out, to just go into an absolutely massive new all-time high. Because this is listed on PayPal, it's listed on Robinhood, it's listed everywhere that there's going to be any sort of retail involvement. And with how much retail gets excited about crypto, if there's on-ramps for them to get excited about, and we're looking at enough price movement, in yesterday's video, I talked about how this was our entire last cycle for the altcoins. We went from 74% dominance all the way down to 40%. We had a 30% gap to be able to earn profits off altcoins. They only ran for 130 days total. If we're looking at this, topping here at 56, 57% or so, this thing just revisiting our main support, the horizontal support of our descending triangle, you're looking at basically 75% of our last altcoin run just in the first leg down. We'll probably bounce, get rejected off of this level here, maybe something like that, before we actually fall to a new all-time low. And then we will be looking at another 2017 type sell-off where this thing dropped from 96% all the way to 35. We'd be looking at this thing probably revisiting like 25 to even 15% dominance potentially. And if you're looking at something like that, you're going to revisit the same type of price action, or at least have the same similarities and correlations to that 2017 type of cycle. And if that's going to be happening, I don't find it coincidental that all these 2017 altcoins are actually reaccumulating, showing massive bullish accumulation setups and looking just like they did before that 2017 bull run.
Yeah, that's so true, because if you have a massive descending triangle in Bitcoin dominance, suggesting that Bitcoin dominance is going to drop significantly, which always happens in every single bull market, which is why the Bitcoin maxis are always like, you should go all in on Bitcoin. But what they don't understand is Bitcoin only performs good during the bear markets and at the very beginning of new bull markets. Bitcoin is going to increase throughout this bull market. It's going to increase a lot in value, but altcoins are going to go crazy. You know, that's what happens in a bull market. People go risk on, and they want to make more money than they're going to be able to make with Bitcoin. So they buy altcoins. They buy, you know, Bitcoin Cash, Ethereum, Solana, whatever, because they know it's going to give them a bigger percentage gain. And so always when the bull market goes full force, that's when you get a big crash in Bitcoin dominance, even though Bitcoin is increasing in value still, and altcoins see these big parabolic runs. There's always that same thing that happens every cycle. You know, if Bitcoin dominance is going to decrease, which I think it will, altcoins are going to go nuts. They're going to go crazy. So
there's just too many. I mean, by default, because of how many new altcoins are created and added, it's going to eat into that dominance of Bitcoin. So by default, I think that this thing doesn't really have a choice but to go down. But big picture, you know, altcoins aren't going to just always be more valuable than Bitcoin. There's going to be a few that, you know, like the Ethereums, maybe the Solanas, but even then, a lot of those are going to fail and to exist within like 10, 15 years from now. So when we're looking at all of these, I kind of look at this being the last true altcoin run that we're going to have, because our following cycle after is probably going to behave similarly to what happened after 2017, where Bitcoin dominance made a much bigger move, recaptured a lot of that lost value. And I think a lot of people are going to get stuck buying the top of the altcoin cycle, which is going to reflect that in the chart. You know, probably I wouldn't be surprised if this is a normal 4-year cycle. You know, for example, if we come over and just look at Bitcoin, I wouldn't be surprised if this ends up behaving. What the heck? I wouldn't be surprised if this ends up behaving like a normal 4-year cycle, because of the fact, you know, what we're looking at here so far is pretty much on the same time frames. Nothing has changed between our long-term trend. You know, if we're looking at from cycle low to cycle low, 1,428 days there, cycle low to cycle low, 1,428 days there. All of these have had 3-year bull runs. So if to the peak, it's 1,064 days there, bottom to peak was 1,064 days there. So each of the last 2 cycles have been exactly the same in time frames, and we follow these normal 4-year trends. So if we're looking at a normal 4-year trend, we're pretty much just looking at, once again, 1,064 days approximately, somewhere in that range. We're looking at a top at the end of 2025. So we still have a lot of time to go before we're at that point in the market. But I think that that's what it's going to do, is follow a normal 4-year cycle, have this big glorious move, maybe go to like 250, 300K per Bitcoin before we sell off. And then that following bear cycle is going to be really, really gnarly. And I'm not going to be surprised that, you know, we follow a normal trend. We bottom at the end of 2027 like it projects. Bitcoin has another kind of normal cycle, or we have an early blow off top that actually ends, you know, these normal 4-year trends that we've had. And during that period is where you would expect to see the Bitcoin dominance, you know, recapture a lot of that lost value if we were to fall to a new all-time low, you know, assuming that we do this in this cycle right here, and then Bitcoin has its bear market. I think in that bear market, Bitcoin dominance would recapture a lot of that lost value, rally all the way back up to these levels nobody thought that it would be at again, you know, really catch people by surprise. And then if Bitcoin does have another cycle after that, I wouldn't be surprised if it continues to kind of hold a lot of that value in the same way that it did over here, where altcoins really didn't have a lot to capture before Bitcoin dominance started holding support. I won't be surprised to see that happen again, just because altcoins in and of themselves are more speculative money. Most of them don't have any sort of real significant value proposition long term. And aside from a select few, in the same way that the internet bubble was, you know, we're going to be looking at those, Bitcoin being the main index that's going to see the true adoption with these ETFs and stuff. They're going to be the ones that hold the majority of that market cap. And I think that with this, you know, people are going to assume that this will just forever go trend into infinity. But I kind of have a feeling that Bitcoin will end up, you know, recapturing a lot of that lost value, just because of the way so much of this money is consolidating through speculation rather than true value.
So I think that one thing also to pay attention to here is the ExxonMobil. Let's do this.
You're on crypto.
Oh, yeah, there we go. One thing, too, to pay attention, you guys, is that the stock market and crypto has a really strong correlation. And so as we have quite a few stocks here in the stock market that look like they need more upside, for example, like ExxonMobil here, as this thing goes parabolic here, then the money that's going to come into crypto is going to be absolutely insane. Because as you get more of a full-blown bull market in stocks and the stock market as a whole,
yeah,
the bull market in crypto is just going to be even more crazy.
Because they have more profit to rotate. And that's why the M1 money supply is so important, is because it shows that people have assets that they can convert into cash to convert into something else. So it shows money can flow back into crypto really easily.
Right. So as we continue in the world market bull markets, then the crypto markets are just going to go completely nuts during that same period of time. And partly why we look at this as kind of like a 2017-like run is because the world markets are also set up to do just this crazy bull market, and crypto is going to be that industry that is the most profitable industry to be part of, just like how the internet has been the most profitable industry since we came out of the internet bubble crash and went into the internet bubble adoption phase.
Right.
Well, we just came out of the crypto crash and we're going into the crypto adoption phase, and it lines up with the stock market here.
That looks so much like Bitcoin,
this is a this is a first sell-off inside of a market cycle. This thing needs to go parabolic and then crash, right? It needs to have a full cycle.
It looks kind of like the ARK Invest chart from the last cycle too. Before its blow off top and crash.
Yeah, the blow off top has not happened. And when we get that blow off top, crypto is going to be insane. It's going to make so many people so rich they won't even know what to do with all their money, right? And what the warning is, well, you guys, we're going to make a whole bunch of money, but make sure that you do take your profits. Most people are too scared to invest right now because the way that the institutions basically did it is they knew they could get all of this retail to get scared of investing right now, so that when the super cycle comes, and just blows everybody away, they're going to buy the top. So what you should do is you should buy crypto now while it's undervalued. And when we go into this crazy bull market phase, then you can take profits at the top while everybody else is excited. And it's going to be connected to the world markets. There's a strong correlation. And
no, I agree for sure. Well, it's amazing how much this chart looks like Bitcoin. Like if you remove these.
It does look a lot like the Bitcoin cycle. I mean,
both of these just look like you're kind of looking at the exact same type of chart. Man, look how big Bitcoin just makes the largest moves.
Yeah, I know it does. In terms of percentage gain, because it's so much bigger than the stock market, so much more percentage gain.
Well, you're kind of looking at the same type of setup. Obviously, Bitcoin took a little bit more time to accumulate, but if I had this on a bigger time frame, it would pretty much look just like the setup. Both of these are all just sitting at their range highs. Like ExxonMobil has just flipped its all-time high as new support and is even getting continuation from there. We'll see how all this resolves. But Bitcoin more or less did the exact same type of thing. It didn't fully flip it, but it kind of did. It flipped the 65K level, which on the, quarterly is support. So it did have a big support and resistance flip. Maybe wasn't quite as, high as what these were, but you're looking at the same setup. And so, if you're talking about ExxonMobil being in this first sell-off before some type of blow off top, crypto in and of itself is kind of just doing the same thing. And I think that last cycle was just a predecessor, like just a little, early stage move, nothing too crazy before the real big, shebang actually comes in here. And that's what it looks like when I look at the Bitcoin chart, or any of these for that matter. My favorite energy. My favorite energy chart is going to be uranium, because I think that this is where the majority of, not the majority, but a lot of upside is going to be made through investing into uranium, because Bill Gates has already started to go out on his media campaigns talking about why we need renewable energy, why uranium is the only option we have, how we need to ditch fossil fuels, all of this stuff. And so, you know, we're looking at the price of oil, natural gas, all of these commodities are going to go up. And I think that oil is going to do the same thing. So the more demand that there is for oil, the more the demand comes for a better, cleaner alternative, right? And so that's why I think people are going to continue to speculate on uranium. The difference is we've never really had a uranium bull run. You know, you could maybe draw that conclusion back in like 2008 to 2011 when we had gold bottom and actually go back to its all-time highs. We did have a mini commodity run during that period, but uranium's never had a true bull run. And I think that that's what's going to change as we get to this commodity cycle. Is look at the volume that's come in here. You know, we've maintained higher highs and higher lows. We're sitting back up at these range highs, assuming that the rest of the markets are going to hold support. You know, we're looking at these things breaking out and going more or less parabolic. Some of my favorite, this has been my best returning energy stock that I've bought so far. I bought all the way back down here at the bottom right after the COVID pandemic, and I've just been holding ever since. But you're talking about some of these stocks having all this volume coming in here. And from where we're at right now, this isn't even the prior all-time high. You're looking at 40x returns just to that. So I think that this has a lot of the same potentials as what crypto shows. And so the thing that we need to understand here, guys, is if we're looking at the M1 breaking out, we're looking at this being the biggest bull run that we've had up to this point. There's a number of, you know, factors stimulating this bull run versus prior ones. We're kind of looking at what I think is going to be a great opportunity for us to make a lot of money off of crypto, take profits on that crypto, and then go rotate that back into some of these undervalued opportunities. Because for me, you know, you could be buying uranium mines, you could be buying, you know, stocks of companies that are already doing that if you have lesser money. But if we're talking about having the opportunity of making multi-millions of dollars in crypto, the amazing thing is, you know, even though inflation is so high and we have these negative factors, we can still outperform everything by buying these crypto assets and making money. So if you can make, you know, $1 million and you have $1 million, if you make a few $1 million and you have like, say, $1 million that you can just put and earn 10 to 12% interest on, you can do that on a lot of crypto farms in the bear market. Stable coins pay up to 20% sometimes because everybody's rushing to get to the stable coins everybody's selling. So if you actually time the cycle right, and you know how to do this stuff, which it's really not that difficult if you understand the time frames, you understand the psychology of things. Don't get me wrong, I screwed up selling the top of the last cycle. You know, I will fully admit that. It's not the easiest thing in the world, but it's easy to have a plan, and the hard part's sticking to it. And that's the big thing. As long as you can get out of your own way, stick to the plan, and realize some of these gains. If you have $1 million that you can kind of park somewhere and earn 10%, you're literally probably earning more than your job that you're working all the time for. And that's just passively that you can live off of. So if we're talking about making this money, having a lot of profit in a short period of time, talking at the end of 2025 for our projected cycle top based off the 4-year cycle, you're looking at like, you know, all of these other markets that are undervalued that we could even compare to being crypto 4 or 5 years ago, maybe longer, going to do the same type of ROIs that we can just, you know, massively compound on. So I think that that's the big thing, is understanding that, you know, there's a lot of opportunities even outside of crypto. And if we look to profit off of those, you know, we can compound our gains and actually just do really well and not have to worry about any of this anymore.
And I think that that's the other thing to really talk about here is stable coins, because stable coins during a bear market, if you can get a stable coin that isn't pegged to the US dollar, because a lot of people want to peg all of their stable coins to the US dollar. But I think that there's going to be value in stable coins that are pegged to like commodities and things.
Well, yeah.
Because that's going to be the best way to store your value in a bear market. Because you can get this huge percentage return, like you can get a 20% APY or whatever, staking reward, and you can keep your money inside of something that's stable, that isn't going to crash. And so I think the real move is, once crypto goes completely nuts, is to take cash into stuff like buying homes if you need a home, right? If you want to own your own home, but also take cash into things like stable coins. because stable coins, especially if you can find a stable coin that isn't only pegged to the dollar, because we just don't know what's going to happen with the value of the dollar.
Mm-hmm.
Almost every single almost every single fiat currency in history has failed.
Mm-hmm.
In fact, I think every single one ever has. After a certain amount of time, they failed.
Like 100-year cycles.
So
usually.
you can't really trust a peg, like to buy a stable coin that's pegged to the dollar, really, at least not long term, because you just don't know if the dollar is going to fail. But any type of a stable coin that's pegged to commodity markets like silver or gold, I think there's going to be a lot of value in that. And then also just, get it while the getting is good. Get rich as you possibly humanly can right now, while the bull market's crazy and while we're getting ready for the biggest bull market in human history.
Mm-hmm.
And then understand that it's not going to be good forever.
No.
There's going to be a correction. You want to take your profit and be ready, but the bull market's going to be bigger than you think it is. And so right now the psychology you want to have is buy the heck out of this market.
Yeah, exactly. There's just so much opportunity. And if you don't sell your crypto and you get too focused, short-sighted on only seeing crypto as your opportunity, you're going to lose your money. And then you just miss out on the ability to be able to compound, buy stuff, add to your wealth, because there's going to be a lot of things that continue to rise. There's a lot of things that are a lot more stable than crypto. And yes, you're not going to get maybe the same ROI as you would with crypto, but crypto in and of itself is getting to a point where there's so much hype with, like, the meme coins is a good example of seeing all of them blowing up. There's so much more speculative money in this cycle than ever before. And I do believe that speculative money needs to get shaken out in the same ways that all of the over-leveraged centralized exchange players, the Sam Bankman-Frieds, the Do Kwons, all of these other people, Three Arrows Capital, whatnot, they had to get shaken out because they were driving up the price of Bitcoin being over-leveraged. It was just a lot of funny money in the same way, but it was through over-leveraged players doing it. So as this happens, we saw all of this, false illusion of real perceived value that happened. And all of that got shaken out in the bear market. And, I think a lot of that was because the cycle was underwhelming due to the pandemic. There wasn't a lot of explosive growth in the economy. Everything was at a standstill. But then through these over-leveraged players, they were able to manipulate the prices and actually drive it up into somewhat of a, good cycle, which it was profitable. There was a lot of narratives and whatnot. But all of them getting shaken out, we saw how gnarly the bear market was. And every sell-off was a new player that was getting liquidated and just dropping, and every single one of these were going bankrupt and whatnot. So when we're looking at this current cycle and we're talking about all of those players have been shaken out, a lot more money is existing on chain. Now we have the real institutions that are here that are accumulating billions of Bitcoin and Ethereum and other cryptos by the daily, way bigger than anything that we've ever seen. And the fun thing about that is I just think that it's going to fuel something we've never seen, a number of fundamental factors, new stimulation for bullish growth that we haven't had. And through that, it really will be that super cycle type cycle where we just haven't seen anything since 2017. But comparing this to 2017, we compare that just because the ROI was so big in that cycle, but it already is dwarfing it. Seeing the funny money and the speculative money with the meme coins tells me that there's, it's not over leveraged players per se with like centralized exchanges and these lenders and whatnot, but it's more so just the retail money that now exists here. The people that are speculating, the people that are just looking to make a quick buck, they're going to have to get shaken out as well. And I think that with, institutions being here, they're going to show it to the mainstream news. The mainstream news is going to drive all of the retail growth to come here. We have Robinhoods. We have all of these different, marketplaces for people, retail, to be able to drive up the assets. And we know how rigged that game is when we watch what happens for GME and GameStop. They just shut the market off whenever it starts pumping. So you can't do that with crypto. We're going to see a lot of those people rush over here, and it'll be kind of like the Wild West all over again. But I kind of view that as maybe the last time of that true Wild West before we just get absolutely crapped on by those institutions taking profits on the top of everybody's head.
Yeah, and they definitely will too. They're going to just dump the living heck out of the market. Once it goes abnormally, like ridiculously high, like once this market goes so high that nobody even expected it. I mean, there's going to be those noobs calling for 9 million per Bitcoin that are just crazy, that who knows what they're smoking, right? there's going to be those noobs that say that it's going to go way, way, way high. But I'm talking like when Bitcoin gets way high, not 9 million per coin high, because that's too high in my book. But when it gets really high and this market goes nuts, they're going to dump the living heck out of this market. But they're not going to do it until they've made a stupid amount of money on the bull market.
Yeah, exactly.
Once they've made a stupid amount of money, then they'll dump it. And crypto's resilient too. I think one of the things we've seen is that crypto is resilient. It's been through 2 massive bear markets. Well, it's been through more than that, but 2 since I've been into it, 2 big bear markets since I've been into it. And it just keeps recovering. The technology keeps developing. And even though it's still early on and not Google Fiber type speed, it's resilient. It's going to be here. It's here to stay, so.
Yeah, I agree. One final chart before we wrap this up, because I think that this is, let me go pull it up real quick. All righty. Oops. So this is what I always like to look at when I'm looking at a market cycle, because I really think that this shows where crypto is the most. When you're looking at the institutional phase of a cycle, you're looking at the first sell-off and the bear trap, but it's once we start distancing ourselves from that average mean line, right? When we're talking about the stealth phase, that would have been like the early days of mining Bitcoin, where the blocks, the reward per block was like 50 or 60 Bitcoin, 25 Bitcoin, huge amounts of Bitcoin that you were earning. And there was such a scarce supply. So that was during the stealth phase, during the initial takeoff. You start to get to the 2018 to 2020 cycles, and I think that that's where you're getting more into this period. And then at the very top of that is where you're getting that sort of first sell-off and bear trap. Because we had CME futures, we had some institutional level of adoption. There was governments buying Bitcoin and whatnot, but it wasn't anything like BlackRock, right? That has been taking place here, the bear trap. BlackRock gets involved, all their buddies start buying it, and now we're leaving the awareness phase. We're leaving the institutional phase, and you're talking the media attention, public enthusiasm, greed, delusion, new paradigm. This is where we're getting into this cycle, and the institutions are getting in not to hold forever. They're getting in to sell the top, and that's exactly why it goes below even where you're talking the institutional level getting in. So if we're looking at that taking place potentially in Bitcoin, we could be looking at the next bear market being pretty gnarly in the way that it could just drop, maybe even lower. Like maybe people are assuming that, every bear market keeps getting lesser and lesser in ROI. The last one was only 78%. The one before that was 83%. This one's going to be like 60%, only for it to drop 90, 95% and actually shake out a lot of people, just because, like we've talked about, the institutions are going to dump the top. And if the institutions are getting out, there's going to be people that have been holding Bitcoin for a long time that are also going to be doing the same thing. The ones that realize that, oh no, the institution sold, they're not here to hold forever. They're going to even start to sell out, knowing that they're selling at a much bigger discount than they could have a year or two ago. I think that's something that will happen and shift inside of this cycle.
Yeah, I think that they're going to pump the living heck out of it, and then they're going to dump the living heck out of it, and I'm here for the ride. I'm going to ride it up. I'm going to take profit and not write it down. But you can ride it up, and you can get rich riding it up, like stupid rich, like more money than you know what to do with rich, if you're willing to buy right now. Well, the institutions are buying because we haven't even really went into the media attention phase. Nope. We like when Bitcoin breaks 100K, then we can talk about the media attention phase. But right now, the name of the game is to be greedy. Be ready for that big bull market, buy the dip in preparation for the pump that's coming, because there's a dip in a lot of altcoins right now. Yeah, Bitcoin's at its all-time high, but relative to where it's going, even it's undervalued, right? Relative to where it's going. So yeah, be greedy right now.
Yeah, exactly. We have great opportunities throughout the market, and we've been over an hour here. There's 2 people asking for me to talk about Midas, so I will do that.
Midas is very important, you guys.
It's one of my biggest investments, so Worry not. What? Hold on. KuCoin. It looks bullish to me. All we ended up doing was making another lower low to retest the top of this range. But all we've really done is just reconsolidate on top of this breakout range, because this was our bear market. We had been inside of this range for a long time, talking 500-600 days approximately. So once we broke out from that, all we really ended up doing was making our first impulse. 1, 2, 3, 4, and 5. We saw an expanded flat A, B, and C with just one more lower low that ended up coming back down to finish out wave 5. So all this did was just make one more sort of, capitulation, I guess. But, you're looking at bullish divergence, and this is even on a 2-day time frame, so I'm sure it's bigger on a 1-day. But you're looking at bullish divergence forming in here, and it's sitting right on top of that same range of support. So I'm looking at this as a big support and resistance flip before we start the next big wave going into a new all-time high. So I'm really bullish on it personally, and the entire ecosystem as a whole. But yeah, that was my, oh man, shout out to you, sir, for the donations. Appreciate that. I'll split it with my good buddy here with me. But yeah, this is what I wanted to cover here today. Just talking, hanging out. We live in the same area, so it's really easy to just record these videos. If you guys do want to see more content like this, just let us know. Drop a comment. Let us know your thoughts on if you ended up liking this. But we appreciate you guys, being a part of this. We didn't get into as many altcoins. It was kind of more just talking about the broader picture of the market. But, maybe we'll do these more often and have the opportunity of actually getting in some submissions from you guys, covering some charts and doing some stuff like that. But I love streaming. It's always been a lot of fun. I want to do these more. And, I live in such a rural part of the Rocky Mountains that, I got to have my compass pointed in the right direction. I got to have the sun facing, east. I got to have everything now. But for real, I do kind of have to have a number of factors working out. So we appreciate you guys coming in. And, in the description of this video, you're going to see all of High Altitude Investing's information, which I'll just pull it up right here real quick. Where is it? Didn't save. Hold on. I have it in here. I'm going to drop it in the comments. Okay, right here.
Sweet.
So go ahead and go subscribe, follow his socials. There's Twitter and YouTube there. But he's going to have a lot of the same opinions as well as differing opinions that I think you guys will have value to. So,
yep. Keep buying, you guys. Keep buying, keep holding, keep your faith and keep your eyes on the future and your eyes on the prize. And get rich. Get rich while you can get rich. And when it's time to take profits, take profits. But, it's the time to get rich right now. And then take your profits and run. That's what I have to say about the crypto markets. I think we're going to pump like crazy. This is going to be a 2017 like bull run. And if you don't take advantage of it, you're going to regret it for the rest of your life. You're going to be like, what the heck was I thinking? I could have made $1 million like that kid down the road that bought a meme coin.
Yeah.
Right. So don't be afraid to buy meme coins either. You don't have to be some genius.
You guys were hating on my video that I made about meme coins, and I don't know why. There's a lot of money there. Quit being haters.
Yeah, there is.
But for real, I love you guys. I appreciate the support. Thanks for jumping in today. This is a great one. I'm going to keep doing more of these, whether my good buddy joins me or not. That's to be determined. I don't know if he finds you guys as attractive as I do. I love you from the bottom of my heart. I appreciate the support. Always appreciate the love that you guys have given me over the years. And I just appreciate that I can even do this for you. And to have the opportunity to make videos, just to jump in here on a Tuesday afternoon and, bull crap and talk around the charts. That to me is the, greatest way to live a life, really. So I just appreciate that you guys give that opportunity to me. So shout out. And with that being said, guys, we'll see you guys in the next one. As always, peace out.
Stay profitable out there.
End stream first.